Good afternoon, everyone, and welcome to our webinar today on AI in private banking and investment management. I'm PryceWilliams, and I'm the founder and managing partner at PryceWilliams Consulting, and have the pleasure of being your host today. I'd like us to move over to the slides, please, Corey, if we can. I'd like to take our audience today through an overview of the session and talk you through some of the key points that we're going to cover today. Firstly, the purpose of the session is to provide you with a view on where we think we are today on AI in our sector. I'd also like us to look at the strategic considerations for operating model and technology. And then we're also going to be touching on the legal and regulatory implications of AI in our sector as well today. Clearly, an hour is not enough to cover all the detail and all the permutations of how AI is influencing our business models, but we're certainly going to try and give you a flavor of that during the course of the session and leave you with some key takeaways and also introduce you to some of our key SMEs who've kindly joined us today to take us through some of their views from their specialisms. So our agenda will be easy enough: introductions, the panel discussion. We'll also then give you the opportunity to ask some questions and hopefully give you some useful answers. And then we'll end with some closing remarks, all within the next 45 to 50 minutes. So firstly, I'd like to welcome our panelists and give them the opportunity to introduce themselves, starting with Joe Bottrell, the Managing Director at NewGen. Joe, please introduce yourself. And also, would you mind just giving us a few opening remarks around where you think we are?
Yeah, of course. Thanks, Parish, and thanks everyone today for joining. So as Parish said, I work for an organisation called NewGen Knowledge Works. We're a content and data management business working across a range of sectors. Like many of you here today, I'm sure our business is changing rapidly through application of AI, both in terms of content and data management and in the back office function that keeps our business running. One of our products is FundHive. It's a tool that supports data and content management for fund and asset managers. Using this tool, we take highly regulated content like Prips Kids, prospectuses, fact sheets, and so on, and we turn what's traditionally been document-led work into highly automated, structured, data-driven processes. And from that vantage point, what we're seeing around AI and automation more widely is really very, I would say, sort of pragmatic demand. Firms aren't asking for systems to make sort of wholesale investment decisions and run the entire operation. They're asking for help managing complexity and removing manual effort. So where we see large volumes of content and data, frequent regulatory change, multiple jurisdictions, that kind of thing, and where there's a very low tolerance for error. We do face questions like, can't AI just do all of this for us? But on the whole, I think there's a recognition that with regulatory demands and constraints, there is a need to kind of control and manage data cleanly, and humans need to firmly stay in the loop on that.
Thanks, Joe. Appreciate that and welcome to the webinar this morning. I'd like to go to Jonathan. Jonathan, thank you for joining us today. Would you mind just introducing yourself and giving a little bit of a view on where we are? And then we can move across to Crispian, who can also introduce himself and do the same. So Jonathan, over to you first.
Yeah, thanks very much, Parish, and thanks for the invitation to join this crew here. I think so I'm Jonathan Armstrong at Punter Southall Law. We're a specialist law firm based in London, and we do quite a lot of work around AI and regulation. We're a Legal 500 accredited firm for that, and we also have a financial services practice as well. And I am an adjunct professor at Fordham Law School in the US, where I do quite a lot of work on AI and emerging technology and the legal ramifications for that as well. I think with both hats on, there's certainly quite a lot of activity around at the moment. There are definitely mistakes being made. A lot of people are running before they can walk. Agentic AI, for example, is the watchword for most people. but they can't work out their conventional AI strategy. And agentic AI adds a huge amount of risk, as we've seen with the announcements from the Dutch regulator in the last few days on OpenClaw and some of the issues there. A lot of the issues, I think, relate to people trying to outsource stuff to vendors who perhaps aren't used to the financial services regime and aren't used to a regulatory regime. The OpenClaw, for example, it seems has just one employee who's part-time. So it's sort of little wonder that they haven't sorted out the regulatory risk point of view. We're seeing increased use of AI by consumers, particularly in areas like subject access requests, in issuing court proceedings, and it's generally spiked a rising trend in litigation. People are making subject access requests coupled with a demand for £150,000 in damages. I spoke to somebody yesterday who's had somebody demand 1.2 million for the mishandling of their data, and they've issued court proceedings for that sum that are in part AI generated. And maybe the other trend I'd point to at this stage is that regulators are definitely interested, they're definitely engaged, and maybe later on I'll go through some of the cases that we've had already, but regulators are alive to the risk. And we can see with cases like DeepSeek, for example, how it moves from regulatory investigation to ban in about 48 hours. And that's a real challenge for organizations that are outsourcing or harnessing AI. One last thing I'll say, shadow AI is obviously very much a thing. No organization can ban AI. The best they can do is push it underground. And for most organizations, that's the worst choice of all.
Thank you, Jonathan. Appreciate that. I quite like that comment on shadow AI. I'm sure we're going to explore that in a bit more detail shortly. A warm welcome to Crispian Lord. Hi, Crispian. Would you mind just offering your introduction, if you like, and then your initial thoughts? Thank you.
Hey, thanks, Parish. Thanks for inviting me along. So yes, Crispian Lord, I was a senior partner at PwC. I built the asset management practice, consulting practice. I was a partner there for 14 years, 17 years at PwC, leaving last year and freelancing now. So if I reflect on the last couple of years where I've been advising clients, as I always have been, on operational change, and then the reflections on AI. If you look back to 2024, I would say, I was doing a lot of conversations with boards around, well, what is it? What does it mean? What can it apply to? Is it the same as RPA, et cetera, et cetera? So there was a lot of explanation, a bit of panic, a bit of what do I have to put out in the press to make it look like I know what I'm talking about, and a few little pilots here and there. And then 25 was sort of a bit of an add-on to that as people started to roll out Copilot and thought that was AI, and that's me done. And there were some firms that were getting ahead of that and starting to apply it into something more useful. So, you think about some of the systems that can be used to do legal documentation and look at legal docs, sort of paralegal type work, and you think and market analytics. So there's certainly been some of that through last year, but I would still relatively low usage.
Not sure if it's just me, but I seem to have lost Crispian's sound there. So if Crispian does come back in, I'll let him continue. What I would just like to comment on before we move over to the panel discussion is that we also have a good friend and colleague of ours, Rebecca Drake, on the line. Rebecca is from Funds Talent. Rebecca, I'm not sure how your voice is doing this morning, but just to all of you who've ever been in anything, any type of performance or webinar, there's always something that sometimes crops up, and poor Rebecca has got a bit of tonsillitis. But Rebecca, just wanted to welcome you and give you the opportunity, if you do have a few words, just to introduce Funds Talent. And thank you very much for planting the seed and getting us together. Because last year, just before Christmas, this was your idea. I don't know if you just want to say good morning to everyone or good afternoon, depending where they are.
Hi, thank you, Parish, and good morning, everyone. Apologies for the voice. Yeah, guaranteed to crop up. Here at Funds Talent, we've specialised in building funds talent teams in Luxembourg since 2007. So over the years, we've seen fund industry continue to evolve, shaped by new regulations and increasingly complex operating environments. One challenge has always remained consistent, which is securing the very best talent. Individuals are agile, highly skilled, and able to work cross-functionally. So today, the idea for this webinar evolved from conversations that we're having with hiring managers and candidates across the industry. So I just want to say a huge thank you, one, for PryceWilliams putting this together, and for the speakers today. Thank you so much for your time.
Thanks, Rebecca, and thanks to the speakers for joining us. The key thing that I would like to hit home is that, as you can see, these are genuine individuals, and we're having some genuine challenges. So these aren't AI bots sitting in front of you or an AI video. So at least you know you're speaking to real people with real insights this morning. What I'd like to do now is move over to our panel discussion, and I'd like to move to question number 1 with Joe. Joe, as you mentioned, you are leading NewGen and FundHive, and you have a fantastic technology platform that allows for the distribution of information and data for funds. And I know that you're working with the likes of HSBC and Deutsche, but could you please just build on some of the initial thoughts that you had around what areas within investment management are you seeing that are utilizing AI and utilizing some of the initial functionality from a technology perspective? Could you give some ideas and use cases for our audience so that they can get a feel for where this is taking place from a tech perspective, please?
Yeah, of course. Thanks, Parish. So I think when we talk about AI and investment management, I think it's helpful to break it down into 2 broad areas. So the front office and the middle and back office. And from our perspective, it's that back office operational layer that often actually gets less attention, but it's where we're delivering huge amounts of value. But to start with, in the front office, we're with our clients, we're seeing AI being used primarily, I think, as a decision support tool, and that tracks across other sectors that we work with as well. So, decision support tool rather than a decision maker, I suppose. So we're seeing applications such as like support with quantitative analysis, market and sentiment analysis, portfolio optimization, of course, but also insights into that kind of client relationship and opportunities to create greater personalization in engagement with clients. But as I said at the outset, what I think is important is that these systems are still heavily supervised. And I'm sure Jonathan will speak more about that. But regulatory expectations around things like explainability, governance, and accountability mean that AI is augmenting human decision making rather than necessarily replacing it. That's certainly how we're seeing things shape out currently. And as I say, that's true across sectors, and certainly true in investment management because of that regulatory piece.
Thanks, Joe. Sorry, carry on.
Yeah, so I think where we're seeing, as I said, the most immediate and reliable kind of replicable impact is further downstream in that middle and back office function. So in things like regulatory reporting, data reconciliation, validation, our world document production and updates, and then things like version control, audit trails, and compliance sign-off. Much of this work has historically been manual, lots of people involved, historically spreadsheet driven, and operationally both risky and quite costly. And that's where technology, automation, and now AI can remove friction very quickly. And that's also really where where the FundHive product sits. So we position FundHive itself not really as an AI platform. It's a deliberate choice. Our focus is more on auditable automation, and increasingly that's been driven by AI. So we take regulated documents, as I said, things like PRIP kids, prospectuses, fact sheets, annual reports, and so on. And we move them away from this kind of one-off manual publishing exercise into a structured, repeatable workflow. That is immediately using automation and using artificial intelligence, lowering operational risk, improving turnaround times, significantly reducing cost, and creating stronger regulatory control. And it's also creating the foundation for future application of AI tools that we haven't conceived yet. So the important thing is that we're creating structured, standardized, and version controlled content and data that firms can safely layer AI on top of. So for example, things like consistency checking, regulatory change analysis, the impact of regulatory change, translation support. So the asset managers that we're working with are working across jurisdictions and producing content and documents in multiple languages. So this isn't content where we can open the kind of system up to a generative AI model, but it's a system where we can improve validation. So where data is coming into the system, are we able to use AI to validate the integrity of that, validate it against the regulation? Yes. We can tighten up things like quality control and consistency. And as I say, verify compliance with regulations using AI tools. So a practical example of where we see this happening is with regulatory updates to disclosure documents. So the PRIP kids and prospectus and so on, SFDR as well. Without an automated process, these changes trigger lots of manual rework across dozens or hundreds of documents with significant operational and compliance risk. Automation turns that into a controlled update across a defined data set, completely changing the model. Multiple documents and data feeds can be updated at a button click, often in several languages, and using a single workflow and output in any format.
But Joe, may I step in here quickly and just summarize some of the points for the audience? So what you're saying is you've got a fantastic underlying technology platform that already exists and has been around for a while. You're already providing a service, one of those being the distribution of fund data to the various distribution channels, whether that's intermediaries, regulators, etc., investors, and so on. But what you're now doing is you're taking AI and you're overlaying that to improve some of the consistency checking, the translations, and those kinds of things. So there is a place for AI, but it's not something that just sort of, as I think Jonathan alluded to earlier, just suddenly solves everything. So thank you for that, Joe. If you don't mind, what I'd like to do now is move over to question 2. We will have some opportunity later on to move into Q&A and talk and dive deep into some of the tech pieces. But I do want to move to Crispin, if that's okay. And I just want to talk about for a minute, Crispin touched on operating models, he touched on planning and so on. So the question for you today, Crispin, is what is the impact AI is having on operating models? And how do you think we need to think about that impact going forward and into the future?
Thanks, Parish. Hopefully the audio will hold up. Let's see. Wave at me or something if something goes wrong.
Sure.
It's interesting just listening to Joe there because it reminded me of an example of where AI is not working at the moment because you talked a little bit about regulatory and regulatory scanning. So a colleague of mine who does a horizon scanning for regulation and does a newsletter. He was doing it manually. It's quite an extensive amount of work. You imagine all the regulators around the world in the big jurisdictions, and and he got an LLM, which will remain nameless, to assist him. And it came back, and after doing some research, and brought back a whole bunch of links and synopsis of articles. But fortunately, because he knows all of the content really well, he was able to look down some of those, and he saw in a particular regulator there were 10 hyperlinks with synopses, etc. And he thought, well, that's really odd. They only usually put out like a couple a year. So he dipped into them, and it had basically made them up. So 8 of the 10, it had made them up, including putting in realistic hyperlinks, realistic synopses, and everything else. So there's definitely still a need for a human in the loop in a lot of these things at the moment. And that probably brings me a little bit to kind of where are we now, which is one of the things I'm going to talk about. And I alluded to in my opening. I think there was a worry, certainly at the executive level, when AI came out, that this was just going to be another RPA fad. And for those that were around and burned through that particular period, there was lots of talk about this was the game changer, and we could effectively automate a lot of our processes. But of course, the business case didn't really work. It was arms and legs here and there, and it wasn't really providing the kind of change that was expected. So there was a bit of a skepticism, and is this going to be the same thing? But I think that's the wrong way to look at it, as has been proven out. But that was sort of some of the things that people were talking about at the start. So roll on, and I think before we talk about where it's being used, and Joe's given some good examples, it's worth talking about what is it good at. So if you think about what it's good at the moment, AI, it's really good where there is structure and there's access to easy identifiable information that's got structure, data governance, data models, thinking things like, APIs, human input. So you think about customer forms, you think about chatbots, etc. You think about existing documentation. So it's good at being able to go through a folder of documents. That's why it's quite useful in the legal documentation space. You think about legal docs where you can sort of analyze those and pull out certain clauses, for example. So it's very good at that. So if you think about the optimal process types, you're thinking about information retrieval, you're thinking about consolidation, summarization, data checking, and that gives you sort of a lens to be able to sort of look at processes through your organization. And that's where you get why you get things like the investment research that was talked about, policy chatbot. So if you think about all those horrible policies that you have when you're in the first line and you're expecting to know all of them, from AML to KYC to ABC and everything else. So the ability for people to actually just point a chatbot at those and pull out the relevant information that they need. Things like consolidating information for sales advisors. So being able to pull stuff out of CRM, so the APIs going into other cloud-based systems like a Salesforce, etc. That's something that's there. Checking trading contracts, Excel with embedded capability, whether it's Copilot or Claude or whatever, the ability to do financial modeling, to pull data, to check data, to check for data quality, for example. So there's quite a few sort of those types of processes where it makes sense. And then the other way to sort of break it down is AI led versus human led. So at the moment, there are some things that you can deploy AI and have AI leading it, but they need to be simple, repetitive. The policy chatbot idea is a good example, but there are a number of processes that are not like that, particularly in FS, as Jonathan mentioned. Customer sensitive, reg constrained, and some of those where you've got proprietary expertise, right? So, going back to that point about the ability to look over something and say, I've got the technical expertise to say that's not quite right. That doesn't, I need to prompt it again or get it to iterate based on the information I've given it. So those are all relevant. And again, you think about things like RFP replies, FDD, interacting with LPs or ultra high net worth individuals. All these things need customer touch, but they can be augmented with AI information to be able to speed up and improve the quality of that interaction. Then it's worth talking about what it can't do. So what can't it do at the moment? it can't really work with a lot of the old data platforms in terms, where there are, and FS is littered with these old platforms that have difficult to interact with. They haven't got the right data governance, the right data models. It's difficult to get the information out. It's not magic. It can't just magic the data out of those platforms. And that's where I think you'll see a lot more data projects over the next few years, trying to get enterprises ready to be able to do more with AI. You've got to deploy those kind of data projects. And then if I think about where we're going next, the danger is you drift into the sort of AI is going to take over the world and super
Yeah.
bots and things like that. But if you want to look at that, there is a good article called AI 2027. It's in my LinkedIn post, and that's a pretty good one for going through. It's done by some really good AI researchers as to what the future might look like, and it's definitely worth a look. But in the near term, practically, what's it going to involve? It's going to involve things like SaaS platforms. Um, so there are some out there like Verco, Artian, and these operate not in the environment, so they can sit outside the platform, go in on an encrypted basis and track what the person is doing. And that gives you the basis as an orchestration layer then to do more automation. It has the ability to memorize what people have done, where somebody's pulled a document from, to compare to something on an Excel sheet, to then prompt a payment, to then go to the SAP platform to make that payment. So it can start to learn that, and then the automation will come with that. So that's a pretty exciting piece. And being outside of the organization and going in on an encrypted basis, that gives you something also that potentially is better for regulation, governance, etc., which probably leads us nicely on to Jonathan and telling us how these things can be
Yeah.
controlled and made to
What
work.
exactly what we can and can't do, or can and shouldn't do really. So thank you for that, Crispian. So just two things before we move over to Jonathan, and we've certainly already hit some of those topics. You've heard them anecdotally, legal, reg, policy, and so on. Um, One, if you are with us live on this particular webinar right now, please don't hesitate to pop a question into the Q&A box. Some are already coming in. So thank you very much for that. Encourage you to continue as we're hitting the halfway mark. And then secondly, we will be signposting the LinkedIn profiles and some of that reading for you at the closing remarks stage of the call today. So you will be getting some more homework and useful reading after today. Jonathan, lovely to have you on board. Your question is, what are the regulatory, legal, and compliance considerations as we consider AI in private banking, investment management? I know you've worked with a number of different sectors. You've worked in the UK, the US, and so on. Please, would you mind just giving us your thoughts and comments on that?
Yeah, very happy to. I mean, I think Joe and Crispian are both right about the importance of human in the loop. It's so important. I've had a hat made that I have for particularly challenging client calls to remind them of the need to do that. And obviously, a lot of the legal risks are removed if you have a human in the loop. I agree that AI as it stands isn't good enough to do things like legal answers. Was a co-author of the New York State Bar Association report on AI in the law, which was at the time the leading report. I can save you 72 pages of reading by saying accuracy rate is about 75%, i.e., better chance of spinning a coin and getting the right answer than you have of asking Gen AI a legal question. And there's all sorts of reasons why that is the case. And we could do a 3-hour talk on that if we wanted. As far as the existing cases are concerned, then the reality is that most of them are GDPR based. So we've had maybe about 300 million euros worth of fines across the GDPR zone, so EU plus UK. And they've illustrated some of the principles that we've talked about already. So there's cases involving Deliveroo, for example, in Italy, that emphasize fairness. People accidentally discriminating against sectors of the population in job allocation, which could obviously apply to financial services as well if we're analyzing different categories of individuals. There's a Clearview AI case in the UK, in many European jurisdictions, in Australia, that is around AI surveillance and harvesting data from LinkedIn and other public sources to make decisions, which has been a big regulatory investigation stretching over several years. There's a case against Replica AI for failure to do a data protection impact assessment. So if you're doing AI and it involves personal data, you're almost certainly going to have to do a data protection impact assessment and/or an AI impact assessment. And there's a set process to go through before you do that, a bit like a business case, but looking at regulatory impact as well. And then we've had investigations against Meta and others for the use of data as training data. And one of the mistakes a lot of organizations tend to make, including financial services businesses, is to train the system on their own data that they already have in a data warehouse or in a pot somewhere. And that obviously kicks up regulatory issues as well around consent, around transparency, et cetera, et cetera. So GDPR is a lot. Many AI applications where they involve personal data. We also have the EU AI Act that has, for example, mandatory literacy requirements. So if you are involved in an AI application that touches the EU, you'll have to make sure that your senior managers and other individuals are literate on AI. So they'll have to undertake some sort of training before they can press go. And the EU AI Act already prohibits some forms of scoring, for example, which financial services organizations have done. It also has transparency requirements as well. There's a phased introduction of the EU AI Act, so more provisions come online over time. Some people are talking about something called the digital omnibus, which is going to push, or the theory is, will push back some of their timelines. Again, really short advice is ignore the digital omnibus. It will not save you. It is not a life ring to a drowning man. And again, there's a longer answer on my LinkedIn profile as to why that's the case. As I've said, I think there are some good use cases for AI. It's important to be really balanced. I think it can be negligent not to use AI in some cases. Some stuff like technology assisted review is very robust, sanctioned by courts, and is useful in areas like subject access requests. As I say, there's huge increase. We use a TAR-based AI tool for subject access requests for clients. Accuracy rate is beyond 90%. Accuracy rate on redaction is about 80-something%. So robust tools, it's important, obviously, to analyze them. And because the volume of complaints is higher, I think that's a good use case. And then just very briefly, looking at the specific stuff that relates to financial services. Well, obviously, there's no specific AI regulation. The FCA haven't brought in anything specifically, but it's sort of business as usual. All of your existing frameworks apply. So if you're subject to consumer duty obligations, of course they still apply when you use AI. The senior manager regime will be super important when it comes to AI. We already know from the personal proceedings against Carlos Abarca that there is personal liability if your organization is a regulated entity and does something with AI or with technology and you don't get it right. So it's personal liability as well as on the organization. And operational resilience will be key as well. You know, as I've said, if it's true that organizations like OpenClaw have just one employee, how are you going to meet your DORA requirements? How are you going to meet your equivalent UK operational resilience requirements if you're relying on a really small subcontractor? And the whole ecosystem around AI is often that they're startups, you know, poorly funded, pushing money. How does that fit into your whole infrastructure? How can you make sure that that's still resilient? And then I'm just going to have four quick other points, if I may, really quickly. First of all, I think the FCA's view is broadly technology agnostic, so it's principles, not tech. And again, they'll impose duties similar to those that I've described under GDPR and the EU AI Act, so fairness, transparency, accountability. Secondly, as I've said, governance will be really important. Senior managers need to understand the risks, and again, that's going to be very similar to the literacy requirements under the EU AI Act. Next, I think there's going to be a real focus on consumer outcomes, again, similar to some of those GDPR cases around bias, around deliberate and inadvertent discrimination, particularly around scoring, applicability for products, et cetera, And then again, I think we're likely to see an increase in FCA supervision, things like AI labs, things like sandboxes. Regulators are generally fond of that type of stuff, and they're definitely increasing their skills level to be able to investigate. So I'm sorry that was a really, really quick run through, but as you'll guess, Parish, lots of activity in this area, lots of impact of the law on what people are trying to do in terms of AI.
Yeah, thank you, Jonathan. And just to reiterate that to our viewers today, and those that will be watching the recording later, I think that's really important, right? This session is scratching the surface in three key areas, right? Jonathan, from a legal and reg perspective, Joe from a organization that provides technology and related services into clients who manage and distribute funds. And then from Crispian's talking about that operating model design piece. How do you develop it? How do you manage it? How do you control it with the advent of AI? So good news, we've had some really good questions coming in, and I'd like to start to spend a bit of time on those, just reminding those on the call, the live call, that you are still welcome to offer some questions. We will also be posting this on LinkedIn later, so if you want to add questions later on in the next few days, you think of something, please feel free to do so after we have uploaded the video onto social media. But if we do go to the Q&A, there's some really, really good questions that have been coming through. What I'd like to do is I'd like to start with you, Joe. There's a question around the expectation of AI and its use being exaggerated in investment management. As someone who's leading a business on the tech front, where have you seen that exaggeration? Have you seen clients walk in and say, "Hey, Joe, give me the silver bullet"? Where have you seen those exaggerations and over promises in the short term? Maybe in the future that will come, but where have you seen those exaggerations or exaggerated expectations to date?
Yeah, I mean, certainly in terms of management of disclosure and production of regulated documents and that kind of thing, we've seen clients come with an expectation that can't AI just do all of this. And I think the broad summary of that is that the exaggeration comes where people underestimate everything that Jonathan was talking about around regulation. We can't take the human and the SME out of the loop on that. We have to maintain good data quality, ultimately, the integrity of the data that comes from the fund.
And we're talking about fund managers, right? Because you work a lot with fund managers who are looking to distribute these funds, right?
Yeah, exactly. And it has to be accountable. You have to be able to account for the decisions and the changes and the updates that have been made to data and content. And if you're introducing a generative AI tool into a model, you can't maintain that accountability. So it has to be controlled, and it has to have that human in the loop, and it has to respect and understand the constraints around regulation, particularly.
So you're saying the exaggerations coming in that this is sort of one size fits all and it can do everything, and I can go and sit on the beach. That's clearly not the case.
There's a plug and play solution out there. we can just introduce a Gen AI model to it and it's going to do everything. And it's simply not the case. We've got pockets where we can introduce a validation tool, or create some consistency checking, or start to look at compliance. But they are specific use cases, and it's not a huge model that's just going to do all of this work for people.
Brilliant. Thanks, Joe. That's a great answer to a really interesting question. So thanks for those that are popping the questions through. Crispin, I would like to bring you into the conversation here, if I may. We've got one around guardrails, and you spoke earlier around what you've seen over, let's say, the last 2 to 3 years. Clearly, I think we're in agreement here today, and probably even prior to the webinar, that guardrails need to be in place, controls need to be in place around that process, where you're going to use it, and so on. Just talk us through the kinds of things you've seen, and you've been discussing with the clients for some time, but just talk us through what you think guardrails could look like in an operating model, or in a process, or in your data structure, etc., when you're wanting to bring AI into your model.
Yeah, it is a good question. I mean, I think you've got to have the usual things, right? So it goes back to the basics, the right governance, the right policies, the right control infrastructure, because this is financial services, right? And you can't get away from that. And I think going back to the exaggeration piece, it's probably easy for people to look on social media or whatever and see, I don't know, Tom Cruise fighting Brad Pitt, I think is the latest one, and thinking, well, anything's possible. And of course, those are quite specific types of technologies that are producing that. That doesn't mean that you can just then go and apply that in a financial services environment, and all of a sudden you've got a fund manager that is purely an AI agent. That's not really where we are at the moment. Not saying it can't be in the future, but it's not quite there at the moment. But in terms of guardrails, I think it's important to understand, what are the risks associated with this. So one was mentioned there in terms of, the ability to go and expose the data that you have in the organization to the outside world, which is a very obvious one, right? When you think about those LLMs, a lot of them, you can close them off to the outside world, but some people probably don't have the expertise or knowledge to know that that is necessarily in the settings, because the LLMs like to get data because they're continuing to train their models. So if they can get that data, they want it. So it's having the right controls in place to make sure that you're not exposing and sending your data outside the organization, which would be one. The other one would be, sort of maybe an excitement in sort of the younger part of the organization to use this stuff, right? So, they want to get in there and start using it, but do you have the controls around them to make sure that they're not using it incorrectly, right? So there's a good example of Deloitte pushing out a report in Australia to the public sector, which was out in the media.
That's right.
And they had all of the sort of the citations associated with it, and a lot of it was AI generated, and they hadn't gone through and checked those citations, which is kind of 101 of consulting and making sure that you're producing a quality product. So you've got to make sure you've got things like that. The other one is coding, right? I mean, this is a really good
Sorry, what did you say?
Coding.
Yeah.
So coding's a really great example of where you could quite easily introduce poor quality code or even malicious code into your world by trying to speed up your coding process and using one of the models to be able to do that. So again, have you got the right guardrails and controls around those types of things? So I think you've got to think both on a policy level, a governance level, a control level, a use case level. There's quite a lot there, but once you get into it, you can start to see how you could construct something sensible.
Yeah. Thanks, Crispin. Appreciate that. Jonathan, we've had a couple of questions actually around risk. So I think this is quite a good question for you to answer, really. The two questions, and if I sort of try and combine them for you. Firstly, we've had one around, what is the risk that's under discussed? And the other question is around the speed of innovation and balancing that with assessing risks. So with your sort of legal and regulatory hat on, what are the kinds of things you're seeing from a risk perspective, which organizations are potentially not taking as seriously as they should? And how do they balance that with trying to deliver that next innovation or deliver whatever the business outcome is? But clearly, there's a balance between assessing the risk and then delivering, what the desired business outcome is. If you don't mind giving us your thoughts on how you balance that based on your background and sort of experience, please.
Yeah, no, very happy to. And I see one of the other questions is around hallucinations, and Christian touched on that already, and that really is a big thing. I just
Yeah.
checked the numbers, the overnight numbers. We're up to 978 cases, hallucination cases that have reached court, usually
Yeah.
where the lawyer or the litigant has been punished or sanctioned or faces sanctions. So we'll hit the 1,000 mark middle of next month, I
And
guess.
these are cases that have direct relation to the use of AI, right?
Correct. Yeah.
Yeah.
So somebody's
Yeah.
used. I mean, the other thing to say, as I've said before, is shadow AI is real. A lot of people are using search engines not knowing that AI is enabled in the search results that comes out. So it's relatively easy to produce hallucinated results if you haven't been trained and if your organization hasn't met that literacy requirements. As far as positives are concerned, then as I've said, for many organizations, AI is something they ought to be considering. It can be negligent not to consider AI. But you've got to choose your partners correctly. You know, as Christian's talked already about coding dangers, one of the biggest vibe coding offerings, again, has less than 10 employees. You know, can you trust them to design code for you when you're in a risk-averse environment and they're so small? But there are some good tools, I think, to try and assess risk. I personally, we use data protection impact assessments, and we use a modified version of a DPIA, which perversely is a longer tool than some that are available, but we think it's quicker because it explains more, it's more intuitive. So we'll go through an organized process. We'll usually develop a tool for a client, we'll train them on it, we'll support them for the first couple, but once they've done 2 or 3, they're normally pretty quick with that. So I definitely recommend that as far as a way of picking up the technology quickly and assessing the risk quickly is concerned. And you asked another question, didn't you? Now, I'm sorry, I've lost my
Yeah.
train
So
of
what I
thought.
was saying, what the question was around risk, right? So if you think about it, you've always got a risk. Everything's got a risk associated with it. Whether you're trying to drive out an investment strategy, you look at that risk and look at the return as an example, or you're trying to make your operating model more efficient, and you may make an assessment of how you're going to change that, and there'll be some risk associated with that. So really, in your work, what kind of risks are you seeing, and how do businesses balance that? Making sure that they don't overkill on the risk, but equally you can't, as you just pointed out, there's cases where you find yourself with a fine on your hands. So how do you
Yeah,
balance it? How do you help your clients to balance, achieving business objectives, but making sure that they're assessing the risks effectively?
yeah, correct. And the other bit of your question was a risk that people aren't really taking into account much.
Yeah.
So as far as those risks are concerned, often the biggest AI risk isn't with your direct organization. So to give you an example, real case, a lot of clients are struggling at the moment with recruitment decisions, particularly where they've outsourced recruitment. And this, I guess, will be inadvertently an advert for Rebecca's organization and doing the right thing. But a
Yeah.
lot of organizations, I think, have tried to take cost out of recruitment by outsourcing it to people who aren't as good as they should be. We've got a couple of cases at the moment where very detailed subject access requests from individuals saying, I was the best qualified candidate. Why didn't I even get an interview? We've said to the client's provider, okay, tell us how you arrived at the decision. Did you use AI? And they've said, we're not sure. That's a really good question. And that causes all sorts of difficulties because obviously my client can't have been transparent because the vendor wasn't transparent with them. So how do we meet our transparency obligations? We're already on the back foot with the person who's threatening to sue us because the vendors let us down. And we're seeing that in all sorts of different areas. Recruitment is just the one I think that's the most prevalent. So that's a risk that many people aren't understanding. My other bugbear at the moment for a risk that people just aren't seeing, and I've written an article on it and happy to send people a copy, is what I call AI vacuums. So a lot of organizations say, we're just not going to play with AI. We're going to have nothing to do with it at all. And as a result, they have no AI presence. And because they have no AI presence, as I've said, a lot of search engines are generating results from AI and from crawling. So if you set up very technical, geeky thing, but if you set up your website with the robots.txt file to say, don't crawl us for AI purposes, that means that somebody else can push content up in AI. And so as a result, if you don't play with the AI bots, then somebody else will in your name. And if you're a regulated entity, that's a really big deal for you because it opens a whole world of potential financial scams, phishing exercises, credentializing conventional cybersecurity attacks. So I think that's the risk that, to my knowledge, very few people are talking about, and they ought to, because it goes to reputation, it goes to brand protection, and financial services organizations know from the messaging that regulators have given them for the last 20 years or so that they have to do their best to cut down on financial fraud. And some organizations, the statistics prove, aren't doing what they should to make sure that their AI presence is robust to stop people creeping in and diverting opportunities to
That's
fraudsters.
interesting, Jonathan. So essentially, if you want to put that into a sentence, not leaning in and engaging and learning about AI is probably the biggest risk, right?
Yeah, I think it probably is, particularly in that specific area around search, moving to AI generated search rather than pay for click, et cetera, et cetera.
Okay. Thanks, Jonathan. I'd like to bring Crispin in here. He's got his virtual hand up. And then I'd like to go to closing remarks from each of our wonderful panelists. But Crispin?
Yeah, just building a bit there on what Jonathan said about web presence. In one of my posts, I talk about a piece of work that I effectively did through an LLM, running a middle office outsourcing project to all intents and purposes, and running through an RFP and the criteria, and then selecting vendors, etc. And what was interesting there is that what the corollary of that for me was, in particular on the asset servicing side, is you really need to think about how you're going to set up your publicly available information to influence those LLMs, right? In the old days, it was how do I get myself up the Google search?
Yeah.
Now this is much more about what are the broader pieces of content you want to have out there. So for example, do you need to then get third parties talking about case studies or things that you've done, or how do you describe your services in a way that's going to be more likely to pull in by the LLM in the way that you want it to if somebody's going to run these types of searches. So it's quite interesting in terms of then, your publicly available information and your presence on the web. What does that look like? And it needs to potentially look different.
Thanks, Crispin. So could I move to closing remarks? And Joe, it looks like you do have a comment there. I'm happy for you to add that in. But if you could give us 30 seconds on closing remarks, the things I'd like to know from each of you before we log off today is firstly, just a reminder to our viewers today what you do and how you help your clients, and why they should get in touch with you. If I go with you first, Joe, because you came off mute there, please fire away.
Yeah, thanks, Parish, and thanks everyone for coming again today. So, our view broadly is that AI delivers or can deliver the most value, I think, in investment management and asset management when it's built on top of already strong automation, good data, good governance, as we've discussed today, and well-defined process. It's not, AI can't be used as really a replacement for that good foundation. So particularly given the regulated environment that we're all working in financial services, getting those foundations right is what matters most. Once that's there, then AI becomes the tool that we can use to accelerate process, drive out cost, absolutely, and reduce risk without it becoming a massive liability. As we said, keeping the human in the loop. So, I mean, that's our broad summary. Thanks again for such a good session.
Thanks, Joe. And your lovely profile picture is online at the moment. For those who would like to snap the QR code, please do subscribe, leave a comment below. Just kidding, just link in with Joe directly. I would like to bring Crispian in. Crispian, if you can just remind those that are watching and viewing now how they can get in touch with you and the kinds of things that you can help with.
Yeah, so as you say, LinkedIn profile is an easy one. I did actually use a bit of AI to tart up my picture, but clearly not enough because I still look pretty bad. So what are my reflections, sort of final thoughts? I mean, consultants are good at hyperbole, right? But I genuinely think that AI is going to be a massive game changer for all organizations. You can already see that, right, in the destruction of the advertising industry. You can see it starting to happen with the, what was it, 15% drops in the share prices of things like Workday, Microsoft, etc. Given what the potential you can do with the LLMs going forwards and the releases by Anthropic of some pretty good agentic capabilities. So I think in my mind, it's critical that executives are thinking about what does this mean for our business model and what does this mean for our operating models. It needs to be both, because it could fundamentally change your what you do and what your USP is and what your revenue streams look like, and then following on from that, what your operating model needs to look like. So I'm obviously a freelancer, happy to help with any of that as organizations wrestle with those challenges.
Thanks, Crispian. Appreciate you being on board today. Jonathan, your closing remarks, and just remind the viewers today how you help and what you do for your clients.
Yeah, I think we've done quite a wide range of AI things for clients. I mean, I think they've probably, if you've not started with anything, literacy is key, and we obviously do literacy programs for board level right down. I think as far as takeaways are concerned, I mean, I think from my perspective, it's a really binary choice. If you employ anybody under 30, no AI isn't an option. Your choices are between responsible AI that you control and shadow AI that anyone can control. That's the binary choice you have in your organization. So make your choice wisely.
Thanks, Jonathan. And thanks to our panelists, and thanks to Rebecca for planting the seed to get us together. Just a reminder that, as Rebecca said, works with a load of different talented individuals in the investment management and fund space. So please do talk to her in more detail about how they can assist and help you, whether that's personally or with your recruitment needs in your organization. I think just as we're closing, just thank you to everyone for joining us, putting effort in today, preparing and providing such fantastic insight to our viewers today. A couple of key takeaways from my side. Clearly, from an individual perspective, you do need to get up to speed. So you need to do your learning. You need to understand how AI works, what it can and can't do. You need to test it. If you're in a business, corporate environment, testing and innovating, get in touch with the teams that are running it. I'm certainly aware of private banks where they've set up roles now, which are the head of AI, and that's their job. Bit like what we saw when fintech was knocking on the door about a decade ago. And then finally, ecosystem was the other thing that dropped into my mind. Asking your wider ecosystem, your suppliers, your providers, like Joe Bottrell at FundHive, who is supporting a whole range of fund managers and product managers with their product, it would be really interesting for them to ask FundHive, what are you doing and how are you putting those guardrails in place? With that, we've hit 1 o'clock. I want to say thank you very much for everyone for joining us today. And we will be circulating the video information and contact details in the next 24 to 48 hours. Enjoy the rest of your day. Thank you.
Okay.